Hey traders, welcome back to this week's stock markets review. We're going to be looking in today's video at the best stocks to buy now and also to sell now coming up in this trading week. And we're going to be looking at the S&P 500 and the US indices because with that surprise 50 basis point cut, estimates were for 25 basis points, came out 50. This has given a boost to stock indices in the US. And we're going to be looking at other indices as well globally before going down into the sectors within the US. And then we're going to drill down, look at some individual stocks to the long side and the short side within the strongest and weakest sectors in the US stock market. Okay, so kicking off with the global indices, and the first thing I want to draw your attention to is the VIX from last week. It was right at the top of the performance metrics, number one in the ranking system here. It's now dropped all the way down to 9, and with a weakening of the performance metrics here of the VIX, what this is telling us is that quantitatively that 50 basis point cut has given a boost to stocks and it is bringing some risk on into markets. Now, it's my view that the start of this cutting cycle is a signal for an incoming recession in the US. However, it may well be the case that we have 6, 9, 12 weeks even or more of upside in stocks before we start to roll over and get a correction and a recession takes hold. So quantitatively going into this week, I do favor long positions in indices, and the TSX, which has been in the previous videos to the upside as something you should look out for to be trading to the upside for long opportunities, is still number one. So again, we're going to be looking at TSX to the upside, the Canadian benchmark. We also have the IBEX, the Dow Jones, the S&P 500 and the Russell. We're going to leave the IBEX today, although if you are trading and you have access to the IBEX, the Spanish benchmark, long positions only is what I'd be looking for. But we will also look at the Dow Jones, the SPX and the Russell. Now, the Nasdaq is actually underperforming here in the performance metrics. So what that tells me is I'd rather be long the Dow Jones, I'd rather be long the S&P, I'd rather be long the Russell in that order. But we're also going to throw in the Nasdaq because if the Dow Jones, the S&P and the Russell go higher, then the Nasdaq should follow. Okay, so let's scroll down to the bottom of the list because I want to see what things I can put on my watch list to the short side so we can have things we can trade to the short side as well as the long side next week. Now, to the short side, we have the Nikkei underperforming because of the Japanese yen strength recently. We're getting a little bit of weakness in the yen, but I think that's going to pick up over the next couple of weeks. We're going to start getting that yen strength back, and the BOJ are at some point going to have to hike rates again, especially as inflation has been coming out hotter than expected. I did put this all into a previous video called Yen Shock 2.0. You can see this on the channel. Now, the other thing to notice is the European indices. So what we're seeing here is with the CAC, the Stocks 50 and the DAX, and also the FTSE, but we'll come to that next. Certainly with the European indices, as we get a weakening of the US dollar, this is causing some strength, relatively speaking, into the euro. And as the currency goes up, this puts downward pressure on the indices. And when the currency goes down, this puts upward pressure on the indices. So I do favor being short the Nikkei, the CAC, the Stocks 50 going into this week primarily. But we'll also look at the FTSE. Why? Because in yesterday's weekly Forex forecast video, and if you haven't already seen it, you can click the link here, open it in a new window and watch it after this video. We go through why the pound is the number one long idea heading into this week. And if that's the case, this is going to put downward pressure more than any other currency on its benchmark indice, which of course is the FTSE. So we will look at the Nikkei, the CAC, the Stocks 50, and also we'll look at the FTSE to the short side in today's video. Okay, so dropping down to the charts now, starting with the TSX 60, the Canadian index. This is a market that has been in the videos over the last couple of weeks to the upside, and it has performed really nicely. When these markets are trending and moving and outperforming, we want to just keep riding them until they turn. So with the TSX 60, what I'm looking for is I want to see it break down below its moving average. Got a 30-period moving average here. I want to see it breach the 23528.77. Once it does that, it becomes oversold intra-week. Especially if we come down, we breach this and we stair-step this prior high. That is going to be a great place to look for a buying opportunity to the upside in the TSX 60 next week for 1 or 2 days up. Usually if you test the lower bound, you usually only get a bounce of 1 or 2 days, sometimes 3, but it takes a day or 2 to actually go down to these bounds or up to these bounds. And I'm looking generally to capture 1 or 2 days worth of volatility from 5 trading days each week. That's the goal. Now, if we break through here, the 23528.77, and we take out the lower bound at the 23190.18, this becomes extremely oversold intra-week. It usually means some kind of major catalyst has come out to reverse this market. But if it happens as a backup plan, if I'm already long here, This is the second place I'd be looking for a 1 or 2 day reversal, because you have roughly a 9 out of 10 chance of pausing or reversing at this lower bound level within the week. So those are the two things I'll be looking for. These are the setups that I trade each and every day with GMT members in real time, all time stamped. And the third thing you can look for is the following. If we start to break down towards the lower bound and you see the moving average turn, what it means is you're getting a correction intra-week. You then can look for the breakout. So it fails to take out the lower bound, okay? You look for the breakout, the moving average turns up, and very often it will nestle into the moving average, and then you get that bull flag set up into the upper bound, in this case at the 24205.96. Above here you become overbought intra-week, so it's a very good profit taking area. Don't forget, again, for those of you who watched the weekly Forex forecast yesterday, the Canadian dollar is one of the best short ideas. What does this mean? This means it's going to be supportive for the Canadian benchmark heading into next week. Next is the Dow Jones. Now, of course, the Dow Jones and other US indices benefiting from that 50 basis point cut, at least in the near term. So we want to ride this wave while it lasts. What I want to see is exactly the same thing. I want to see the Dow Jones breaking below its moving average next week, trading into the 41328.38. This is where I'll be looking to step in for a 1 or 2 day reversal to the upside next week in the Dow Jones. You take out the lower bound, very unlikely you're going to take out the upper bound. Upper bounds only tend to get taken out, in an uptrend like this, where you get an intra-week breakout. If you bounce off the lower bound, don't expect to take out the upper bound in the same week. What it might do then is consolidate and take out the upper bound the following week, but not within the same week. The second key level you need to pay attention to is the 4593.40. That is the level at which the Dow Jones becomes extremely oversold intra-week. So if I step in and I buy this next week, and for whatever reason we get some kind of major catalyst that comes out, it pushes the Dow Jones into a reversal, we take out the 4593.40, this would be the second place, whether I'm long already or not, and I'm risk managing it, or this is an initial position, I'm going to be looking for a 1 or 2 day reversal from this level. And finally, you can look for that intra-week correction or consolidation where you trade down below the moving average towards the lower bound. Instead of taking it out, you get momentum back in the other way. You trade back above it, the moving average turns, you get that kind of bull flag into the upper bound in this case, for a nice profit-taking target at the 42798.33. Next is the S&P 500. I expect all US benchmarks to either go up together or down together, but in this case, heading into next week, I expect them to move up together. At least, if they pull back and bounce off these levels to start to bounce. So coming into next week, what I'll be looking for is I'll be looking for the S&P 500 to break down below its moving average, trade into the 5593.73 and below it. We then become oversold in a market that I want to be long, quantitatively speaking, and this sets up a really nice opportunity for a 1 or 2 day reversal to the upside in the S&P. If we break through here for whatever reason, it's not usually expected, but it can happen with a major catalyst, and we push all the way down to the 5484.92 in the S&P 500. This is the second place because we become extremely oversold intra-week. It's the second place, whether I'm long already or not, I'll be looking for a 1 or 2 day reversal. And finally, if we start to break down towards the lower bound, and you get the moving average turning, and instead of taking it out, you get the rally back up, you get that intra-week correction, consolidation, and breakout, you can look for the market to pull back in, to hug the moving average before rallying, that kind of bull flag setup into the 5811.36. Next is the Russell. So we're talking about small caps in the US. Now, I prefer the other indices, but small caps are more sensitive to interest rates. So a cut, 50 basis point surprise cut, should actually benefit the Russell slightly more than the others. But I do like all of these US assets to the upside. I can only buy US indices next week. I cannot sell them. So if the Russell starts to pull back, what I want to see is I want to see it pull back, breach through the moving average and take out the first lower bound at the 2162.01, turn oversold intra-week here. And this is going to be a great place to look for a 1 or 2 day reversal to the upside in the Russell. If for whatever reason, as a backup plan, we blast through there and we end up taking out the 2095.47, whether I'm long or not from here, and I'm cost averaging this, risk managing, a losing position, or I get the chance to enter an initial position here, going to be looking for a 1 or 2 day reversal to the upside. And finally, you cross over the moving average, but before taking out the lower bound, you blast higher again. You can look for that pullback into the moving average and the bull flag set up into the 2295.08. And I would imagine we're going to take out, if we do come up to this level, we're going to take out the prior high over here as well. And the final US index we're going to look at is the Nasdaq. Now again, I can either be long or do nothing. It has struggled relative to these other markets, but again, like small caps, it's more sensitive to interest rates. So if we start to see this pulling back, I'd like to see this correct into the 19212.65. It becomes oversold intra-week. I'm going to be looking for reversal patterns on lower time frames, for momentum to slow, and I'm going to be looking for that 1 or 2 day reversal to the upside from below this level. If for whatever reason we blast through here and we end up at the 18633.82, which is expected to happen but only rarely, if we do that, this is the second place. I'll be looking for a 1 or 2 day reversal to the upside, whether I'm already long and managing a losing position or whether this is an initial position. I'll be looking for this. And finally, of course, if you start to break back above the moving average, you get this correction intra-week, and then you consolidate and you hug it. Look for that bull flag breakout, in this case, into the upper bound at the 20370.32. Great profit taking target next week in the Nasdaq. Okay, so moving on to the global indices that are setting up for better short opportunities. So important distinction to make, having a short bias and looking for short opportunities. If all of the other indices like the S&P, the Russell, the Nasdaq push, they break out midweek and they push into their upper bounds, you're probably going to see the Nikkei pushing into its upper bound as well. So, if you get those intra-week breakouts and they all move, very often the indices all move together, not exactly, but generally speaking, they all push into their upper bounds, and the Nikkei takes out 39086.08, and also this high, which is a great opportunity, above false breakout, above this kind of high, fails and then sells off. If that happens, what I'm saying is it's better to short the Nikkei from the upper bound, or the FTSE, or some of the European stocks, than to go in and try and short the Russell or the Dow Jones or the TSX from their first upper bound. So if we get that set up and we take out the 39086.08, I will be looking for a potential 1 or 2 day reversal to the downside in the Nikkei. Don't forget, a stronger Japanese yen, even if it's softening a little bit last week, maybe this week, it is still putting downward pressure on the index, and this idea that the BOJ are going to have to hike again is leading to downward pressure on the index. If we blast through here for whatever reason, even if it's unexpected, and we take out the 40432.67, we become extremely overbought intra-week. I would be looking for an opportunity once again to sell this for 1 or 2 days, and whether I'm involved already from here or not. And finally, you might see this pulling back. It might get close to its upper bound, and then you get the intra-week breakout, the moving average turns, and you see that kind of bear flag set up in this case down to the 36392.91. Next is the French benchmark, and don't forget, I have a bullish bias on all these indices. So we're looking at primarily, if all the indices break out intra-week and take out their upper bounds, once they all take out their upper bounds, you can't really short or do anything with the stronger or better performing indices in the performance metrics. So stepping into the French benchmark, the 7633.91, this is where I would be looking for momentum to fade and for reversal patterns on lower time frames, so we can get that kind of liquidation and a sell-off for 1 or 2 days. If we blast through here and we take out the second upper bound, whether I'm short or not, this is an area I will definitely be looking for a 1 or 2 day reversal to the downside next week. And finally, if we start to work our way up, and instead of taking it out, you start to get the momentum, things turn, and you start to see these selling off, you can look for that bear flag setup. It may be the case that other indices take out their upper bounds, the French benchmark doesn't quite make it, and then it reverses, and then you get that bear flag set up into the lower bound, 7366.60. Next is the Stocks 50. Now, again, I cannot buy this market next week. I can only short it, just like the Nikkei, just like the French benchmark, CAC. So any pullback in this market, we take out the 4969.58, and I would like to take out these highs as well. We should. We take out this, we turn overbought intra-week, we should take out this high as well. Now we're overbought intra-week and we're trading into a resistance. This is going to be a place to start to look for reversal patterns for a 1 or 2 day liquidation. If we blast through here for whatever reason and we take out the 5066.61, we become extremely overbought intra-week. We have a much higher chance of pausing or reversing. That would be the second place, whether I'm short already or not, that I'll be looking for a position. And the third thing, of course, as always, if you get close to it and you fail, and let's say all the benchmarks hit their upper bounds and then start to reverse, you can look for that bear flag breakout, pulls back, hugs the moving average, and then you get that bear flag down to the 4775.51, which is a great profit taking target in this market next week. And wrapping up the global indices, we have the FTSE. Now, why the FTSE? Because as I stated earlier in the video, the pound is the #1 long idea heading into next week. We have that interest rate regime in the UK where they're holding interest rates. Other countries and central banks are cutting interest rates. This is feeding through to the pound, and the pound being strong, relatively speaking, is suppressing the FTSE. So I can either be short the FTSE next week or do nothing. I cannot buy this market. What I'd like to see is this market pushing up, taking out the 8357.81. It becomes overbought intra-week. Roughly a 7 out of 10 chance of pausing or reversing back inside those initial ranges. Now, if we take out this high or this high, especially this high, if we come through quite deep, any of these areas offer confluence. So now we're overbought and we're trading into resistance. So look out for those next week. I would be looking for a 1 or 2 day reversal to the downside in the FTSE. If we blast through here, as with the others, and we hit that almost emergency case second upper or lower bound, which does happen, but rarely, we take out the 8485, we become extremely overbought intra-week. Now you have roughly, based on market pricing probabilities, a 9 out of 10 chance of pausing or reversing near that level or above that level. And the final thing you can look for, of course, if all the indices push to their upper bounds and the FTSE starts to move towards it, but it doesn't quite make it, and then we start to see things reversing, you can look for that break back down below the moving average, that momentum, the pullback into the moving average kind of hugs it, and then you get that bear flag set up into the lower bound and a great profit taking target, the 8102.16. Okay, so let's have a quick look at the sectors. We're looking at the internals of the US stock market here. Often the internals lead the benchmark. And what we're seeing here is, if you remember to previous videos, we had risk off, we were starting to see things sell off, the Nasdaq was underperforming, etc., etc. And we had XLU, utilities, the most risk off sector, right at the top of the performance metrics. XLF, late cycle, kind of risk off sector, outperforming. We had XLRE, which is another sector you tend to see kind of with a deflationary outlook. Now what are we seeing? We're seeing XLK reversing, making its way up into probably the positive side of the performance metrics next week. XLI moving above zero. And XLY, one of the most risk-on sectors in the US stock market, moving into the first place. So we're seeing the internals of the stock market actually pretty risk on. That's the message we're getting from here. That's what this is signaling. And when that happens, again, the benchmarks, S&P 500, the Russell, the Dow Jones, and Nasdaq, tend to follow that. The internals tend to lead the overall benchmarks. That's why the sectors are so important, and we slot these in before we start to look at the individual stocks. So what are we seeing to the short side here? Well, we're seeing XLE, XLB, and XLV. Now, XLV to the short side, that is a defensive sector. And also look at XLP, staples. In fact, when you take consumer discretionary and consumer staples, you can look at how those two are in relation to each other in the Hedge Dash platform here. And if consumer discretionary is above staples, that's actually risk off. Consumer discretionary is below staples, that's risk off. And all of the risk off sectors are starting to underperform or soften. So going into this week again, this backs up this idea after the VIX peaked in the indices that we should be looking at risk on. We should have a bullish bias focusing on buying stocks. Doesn't mean we can't short some things as well if we get the opportunity. So we're going to look at 3 stocks in XLY, which are leading the pack. We're going to look at a stock in XLI, which looks good for next week, and a stock in XLC to the upside, which looks good. And we're going to look at 3 stocks in XLE, all laggards, which we should be looking for short opportunities given the chance. We're going to look for a stock to the downside, which looks good to the short side in XLB. And we're also going to look at a healthcare stock, which should also underperform, another laggard. We should be looking only for short opportunities heading into next week. Okay, so kicking off the individual stocks, and we're looking at Tesla. Tesla is the leader in XLY, and also it's the leader of the pack overall because it ranks #1 in the Hedge Dash quantitative analytics platform. That means I can either buy this or do nothing next week. I cannot sell Tesla. What I want to see is this. I'd like to see Tesla breaching its moving average, looking at a 30-period moving average here on a 1-hour time frame. Trade down below the 217.72. Tesla is a volatile stock, so it can test quite deep into this kind of buy zone between these two levels, especially if it tested this low. That would be a great place to look for momentum to fade, especially if you're a day trader and you like to look for this stuff intraday. You can look for that 1 or 2 day reversal to the upside in Tesla from there. If we blast through there and end up down and below the 197.20, Tesla becomes extremely oversold intra-week, that'd be the second place I'd be looking for a potential long opportunity in Tesla. And the third and final thing, of course, you can look for is if you start to consolidate and correct intra-week and then break back above the moving average, so you get this kind of contraction and then it breaks out, often pulls back into and hugs the moving average, and that gives you a nice bull flag setup into the 258.77, which is a great profit taking target next week for Tesla. Next is DHI, home building stock, sits in XLY. So if we're going to get outperformance of the sector XLY, we should see this outperforming to the upside as well. What I'd like to see then is I'd like to see this then essentially do the opposite initially. So it's a market that should outperform and it becomes oversold. What that means, we could look at this almost as a mispricing and say, okay, it's oversold below the 184.29, especially if it breaches it and tests this low. This would be a great place to start to look for a 1 or 2 day reversal to the upside in DHI. If you break through here and take out the second lower bound and you kind of stair step this consolidation over here as well, the 176.70 is the second place I'd be looking for a potential 1 or 2 day reversal as DHI becomes extremely oversold intra-week. And finally, we're already below the moving average. You can look for price to break out intra-week. You can look for that kind of bull flag setup where it tucks into the moving average and then rallies as a bull flag into the 199.48, but I would imagine taking out this high as well. You can see that exact setup over here, breaks above, tucks into it, rallies, tucks into it, rallies, kind of tucks into it, rallies. Next is eBay. Now, eBay had a correction last week. However, this is a stock that is still a leader in the hedge dash algorithm. So what this means is this has a very good chance of bouncing, especially if the overall indices go up and XLY outperforms. So what I'd like to see is I'd like to see eBay come back down, take out the 60.64, becomes oversold intra-week. I would be looking at buying the dip for a 1 or 2 day reversal. The second thing, of course, if it breaks through here and blasts all the way down to its second lower bound, 58.57, this would be the second, especially takes out some of these lows. This would be the second place I would consider a long opportunity for a 1 or 2 day reversal. And because we started to move way down towards the lower bound last week, if we just start to, very good chance we just break out intra-week and we kind of consolidate again into the moving average and you get that bull flag set up into the prior high and above the 64.79, which is a great profit taking opportunity for any intra-week longs in eBay. And what do I mean by intra-week? I just mean within the week. The next stock to the upside we're going to look at sits in XLI, industrial sector. And GE, I'm looking at this on the daily chart for now because I want you to see what's happened. We had a big run up, we've consolidated, look at this major consolidation, and now we've broken out, we've pulled back, and we failed to make a low here, meaning this break with momentum is very likely a third wave after a consolidation breakout. So I do favor long positions in this stock next week. The setups I'll be looking for if we drop down to the 1 hour time frame, I'd like to see this break down below its moving average, breach the 180.19, perhaps even breach deeply, take out this low, a previous kind of support in the 1 hour. But once it starts to take out this level, it becomes oversold and I'm looking, are we getting reversal patterns? Are we going to see slowing momentum? And below this level, I'm going to look for those signs and I'm going to look for a 1 or 2 day reversal to the upside. If for whatever reason we fail at this first level and we come all the way down to the 172.96, whether I'm long from here or not, looking to cost average a losing position or just looking for an initial position, this would be the second place. I'd be looking for a 1 or 2 day reversal. And finally, with all of these stocks to the upside, especially as we have a bullish bias, you could very well just see these breakout intra-week with those kind of moving average bull flag setups where they tuck in and then rally. In this case, profit taking target this week is 194.66. And the final stock to the long side we're looking at is T, sits in the XLC sector, and this is another leader in the hedge dash algorithm, sitting at number 8 overall. If we start to push down, we're already below the moving average, so we could very easily see this bear flag into the 20.91 and trade into this prior high. This would be an area I would start to look for a potential 1 or 2 day reversal patterns, slowing momentum, etc. If it breaches this and tests the 20.29, T becomes extremely oversold intra-week, and again, you'd probably need some kind of catalyst. This would be the second place I'd be looking for a potential 1 or 2 day reversal, whether it's an initial position or cost averaging a losing position from here. And the third thing, of course, could just trend down, does this very often. Maybe it double bottoms, takes out this low, and then it reverses back above its moving average. The moving average turns up, you get it kind of settling, just like this. And that's your kind of bull flag setup you can look for intra-week. Into the 22.16, we become overbought intra-week above there. I wouldn't be surprised to see this take out the high as well if we trade up into this area. Okay, so wrapping up the video with 5 of the best stocks to look at to the downside. All of these are laggards in the hedge dash quantitative analytics platform. So we should be looking for short opportunities only. The first 3 are going to be in XLE, so they're basically oil stocks. And especially as in yesterday's weekly Forex forecast, I outlined why oil is still a good short. Again, this should continue to weigh on some of these oil stocks. Again, I have a bullish bias on balance, so I prefer to buy stocks next week, but these 5 I will be looking for opportunities. I'd like to see APA pull back and test, and in fact breach, trade above the 26.32, become overbought intra-week. I'll be looking for a 1 or 2 day reversal. If we blast through here for whatever reason, test this, perhaps even test the underside of this breakout low, then I would be looking, this is the second place I would consider a potential short opportunity for 1 or 2 days in APA. And the third and final thing you can look for is that kind of intra-week bear flag breakout. In this case, you sell off, you pull back, you kind of tuck into the moving average, and you get that bear flag into the 23.81. The next energy sector stock we'll look at is Oxy. All of these XLE stocks we've looked at in previous weekly stock market review videos, and they continue to be great opportunities to short. So we're going to keep riding this till the wheels fall off. Any break higher in Oxy, especially above the 53.33, it becomes overbought intra-week. Looking for those reversal patterns, maybe a double top on lower time frames and a 1 or 2 day reversal. If we blast through, as always, and test and breach the 55.02, we're extremely overbought intra-week. Whether I'm short already or not, this would be the second place I'll be looking for a sell-off. And the third thing you can look for is that intra-week breakout. Maybe we just take out this high and then we fail, and you get that bear flag set up, and it's kind of a breakout of this correction back into the moving average, kind of hugs the moving average. You can look for that short into the lower bound here, profit taking target of 49.94. The third and final energy stock we're going to look at is DVN. Again, like all of the other energy stocks we just looked at, this is one of the biggest laggards in the HedgeDash quantitative analytics platform. So if we become overbought intra-week on a real laggard, this is where I can start to look for a 1 or 2 day reversal to the downside. If we blast through here and we test the underside of this kind of double top breakout, this would be the second place above 43.67. We become extremely overbought intra-week and we retest this pattern breakout. This would be the second place. Whether I'm short already or not, I'd be looking for a 1 or 2 day reversal. And the third and final thing is, if you start to move up intra-week, you carry on this correction and then you break out with momentum, you pull back, test or hug the moving average. You can see one over here. This is where I'd be looking for that bear flag setup into the 39.34, and you could probably look for the prior low as well as a profit taking target in this market. The next stock is the Mosaic Company, looked at in previous videos, and again, look at last week, we rallied, but look at the sell-off we got. So looking for short opportunities in this, once again, it's still a very significant laggard in the HedgeDash algorithm. Any pullback this week, if we test the high once again, just like we did over here, this would be a place where we become overbought intra-week on a laggard. We test a prior resistance area. I will be looking for momentum to slow and for a 1 or 2 day reversal to the downside. If we blast through here, test the 28.01 and break above it, we become extremely overbought intra-week. It's the second place, whether I'm short already or not. I'll be looking for a potential short opportunity for 1 or 2 days down. And finally, if we pull back and you start to break back down below the moving average, or it's broken down now, you may even get it pull back and just bear flag straight down. But if it pulls back towards its low bound, then breaks back down below, you can look for that momentum breakout and back into the moving average for it to hug it, and then look for that sell-off to the downside into the 24.33. Great profit taking target, but you could probably aim for the prior low in this case as well. Wrapping up the video then with HUM. This is a market that has been highlighted in prior weekly stock market review videos as a good short opportunity, as a laggard, one which we should look out for underperformance, and it has subsequently underperformed. So again, any break higher in this market, we trade above the 325.75. I'm looking for this market just to continue to underperform. So it turns overbought intra-week. I'm going to be looking for potential short opportunities, 1 or 2 days down. If we blast all the way through here, test the underside of this consolidation and breach the 341.10, we become extremely overbought intra-week. I'll be looking for 1 or 2 day reversal, whether I'm short here already or not. And finally, if we start to correct towards the upper bound and the moving average turns, and then you get that kind of correction, and then you get the correction breakout, look for it to hug back into its moving average for a bear flag setup into the 295.06. I can either sell this next week or do nothing. Buying this stock is not an option for me next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-Trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge Hedge-platform is included with every GMT membership.